The history of global finance, Zubin, is defined by two core, relentless truths: the accelerating pace of change and the constant melting of moats. We're going from eras that lasted millennia to phases that basically last decades, simply because technology keeps destroying the barriers that protect the palaces of profitability. Now, the new moat is being built by fintech giants. Finance is no longer a destination, it's an invisible intelligence.
It's both exciting and terrifying. The early neobanks models that came out were built on a bit of fantasy, weak unit economics, over-reliance on interchange fees, exploiting the Durbin Amendment.
Agree, Zubin. And I'd add to that list the then romantic, now real idea of democratization of finance. Okay, so from the ashes of fintech winter rises not one, but 7 phoenixes. Chime and SoFi in the US, Monzo in the UK, Kakao Bank in Korea, WeBank in China, Revolut globally, and Nubank. Both Nubank and Revolut, Zubin, have turned the fintech winter on its head by mastering both scale and profitability.
Their aggressive growth contrasts sharply with the global banks like HSBC and Citi, who are selling off retail operations due to the cost.
That's right, Zubin. And what ties all of this global ambition together is a brilliant, repeatable 3-step blueprint, essentially the neobank flywheel. And here's the kicker. This has been used successfully by trad banks. JP Morgan Chase UK went from zero to market leader. Their strategy is a textbook example of a modern challenger bank prioritizing a low CAC initiative, the Wedge, followed by building out its product suite to increase the RPAC, the monetization ladder, and all underpinned by an efficient digital-first tech stack, the efficiency driver. And speaking of efficiency, this is a great segue into the final structural rewrite to turbocharge Neobank 2.0. The quiet stability we discussed earlier, enforced by the post-2008 regulation, is about to be shattered. And 3 forces are promising disruption at scale and pace.
So, Aman, what's in this trifecta?
Okay, so first is the loosening of regulatory constraints. Second, is the introduction of AI for native digital. The third is the emergence of embedded banking and the creator economy of money. We've seen the serious move by tech founders for a national banking charter.
And let's not forget the creator making his move with YouTube sensational MrBeast, who filed for a trademark for his banking app.
You know, Zubin, I got something that might top that. I've got a credible rumor that the ultimate showgirl, Taylor Swift, is going to launch her own financial services brand.
You heard it first. Right here on this, Tate is about to slay the finance game. Boom, the engineering mindset finally wins. So this brings us to the end of this wild ride through the history and the future of money. Survival for both trad banks and neobanks will depend on one thing: adopting the agile, efficient, and technically dense playbook of the new king. And that, Aman, brought us directly to your 6P OS framework, the definitive manifesto for any bank.
Exactly, Z. We hope you leave here with the 6P OS that works 7 days a week to future-proof yourself.